Hey guys, welcome back. So today I'm going to be looking at CGC. This is Canopy Growth Corporation. This is an American company that's in the wheat industry. We have been monitoring wheat stocks for the past maybe couple of days. And yeah, so I'm gonna go over what happened in these past 2 days and where I see this thing going from here on. So you can see I have this image I shared on Wednesday, so 2 days ago. I saw this forming a descending resistance line here that if it broke in the upside, the target would be at $60. The price at that time was $51, 51.17. So this is for a short-term trade. If it breaks resistance, target is 60. If not, it could turn into a bearish triangle. So what happened after that? Basically the next day, you can see here, this is from Thursday, so yesterday. And this actually turned into a bearish triangle. So I said here, decreasing volatility and decreasing volume equals tightening pattern. This thing will break out vertical. Watch for a break anytime in the next 24 hours, probably. And you can see how the volume was tightening a lot and the volatility was decreasing as well. And just 30 minutes after posting this on the group, boom, we had a vertical break. So I did enter a short position here. This is the target at $40 from this triangle. However, I took profit here because this was the level of the 20-day moving average. So I figured this thing would bounce back up to my entry level. So I didn't want to give it all back. So I took profit here with the intention of re-entering short again near my initial entry level. This is the 15-minute candles. The trading conditions for these stocks are just great, are just like crypto used to be in 2017. So anyways, let me go over this. So I took profit here. This is the record of my trade. So it was an 11% profit in about 20 minutes. You can see here, created 43 minutes ago, closed 7 minutes ago at the time of taking this screenshot. So 11% profit in like 20 minutes. I haven't seen this since crypto last year, and I took only a 2 times leverage. This is not 20, 50, or 100 time leverage. It's a 2 times leverage. So yeah, crazy. So what happened after? I started going into smaller time frames and looking for patterns, and a head and shoulder formed here. So, and as you can see, I have been sharing all my movements. So, you know, anyone could have done the same. So here you had a very clear head and shoulder and a breakdown. So I entered short again, and in like 5 minutes or less, because this is the 1 minute candles, guys. In 5 minutes, boom, target made. That was another 5 or 6% profit. And after that, the market closed. So this is the last picture that I shared. I think the market is closed now, or about to close in less than 1 hour. This means the daily closed below moving average, because this is the daily chart you see here, and it closed below the 20-day moving average. So it's very likely it will make target at $40, but be careful to enter short here because it can bounce. It doesn't have to make the target in one single candle. Anyways, the message here is that if it makes the target at 40, that's a great opportunity to buy the dip, because this is, you know, very clearly uptrending. Let's take a look at the chart now. This is the 1 hour candles. As you can see, the target is still here at $40. You can see this is very nicely uptrending. There's a lot of trading activity here. Look at this volume. That's why it's so easy to trade it. Patterns work out most of the times. It's not like in crypto now. After we had the initial sell-off in crypto from January 2018 until I think it was May or something like that, that was a great time to short the market, and that was the last time where you had, you know, very good trading opportunities in the short side, so for shorting. But after that, the market became the volume it's too low, there's no trading activity, patterns don't work out, they break in the opposite direction than they're supposed to break. It's been kind of like consolidating for the last few months, so it's not in good trading conditions. You need to be able to identify when a market is not in good conditions for trading. It's just better to not trade at all. And I get these comments from people sometimes saying that a good trader should be able to trade in any conditions. That is absolutely opposite. A good trader will be able to recognize when a market is not in a good condition for trading, not long, not short, and will be able to stay away from the market and do nothing unless the conditions improve. It is a lot harder to be able to do nothing than trying to overtrade just for the sake of trading. That's what beginners do. They overtrade. They will try to trade in any conditions. That is not the right thing to do. You need to be able to recognize when a market is good for trading or is not good for trading. Cryptos are not good for trading, and it's been the case for the past few months. And these markets, as it seems, they are really good for trading. There's a lot of liquidity, a lot of trading activity. So as I said, patterns work out well more often than not. You have breakouts. This is super volatile. There's no other market that is as volatile as this other than crypto when the conditions are good. Commodities are volatile, but this is like from another world. The volatility here is just paradise for trading. So anyways, what I was saying, guys, is that the target will probably be made here, and it's not only a level of support here, it was resistance here, it's also the target for this triangle, and it's also a 50% Fibonacci line. If you draw Fibonacci retracement here from bottom to top, you see it's exactly at the 50% Fib level, which is very common when you have vertical movements, whether it's in the upside or in the downside. The price will usually correct half of the vertical movement, so halfway the vertical movement. If the vertical movement is down, well, it will correct up to halfway of the vertical movement. In this case, because it went up, it's correcting down, and it's very, very typical that it will correct to the 50% Fibonacci level, which is halfway the vertical movement. Now, I would expect at least a temporary bounce here. However, if this eventually doesn't hold, say for example, it bounces here all the way up to the 38.2, and then it comes back down, and it bounces a couple of times here, and you see the volume decreasing again, the volatility decreasing, it could break in the downside as well. So if this eventually breaks in the downside, then your next logic support level is going to be the 61.8, which is also support here, as you can see. Let me extend this. It's probably going to be, yeah, it's also support from the previous peak here. So it would make sense also, if 50% doesn't hold, then 61.8% should hold. If 50% doesn't hold and it breaks down and it gets to the 61.8, I will take the analysis from there. I'm not gonna, I'm not gonna be predicting every bounce here until the end of the year. I have to take it day by day and see how it looks, how hard the bounces are, how weak or how strong it looks. But for right now, guys, I would say 40 is a great level to go long. Of course, not to set an automatic buy order. You need to, what I do personally is I wait until it gets there, if it gets there, and then I see how the chart looks before I decide to go long. But as it stands right now, I'm watching for that. I'm watching, waiting for that 40 and preparing to probably go long, unless something changes. So let's see the daily. It's just in a perfect uptrend here. If we draw a line here, you can draw a line from here to here. You can see it gets all the touches. What used to be resistance, then it became support, and it's just perfectly uptrending. So even if 50 doesn't hold and it goes to 61, I'm still going to be calling for the bulls. Of course, I'm going to be shorting in the meantime, like I did yesterday, but I'm going to continue to call for the bulls here because this has been stuck here in this area for more than 6 months, since the beginning of the year when it reached this peak, this top of this bubble. It corrected all the way down, and then it's been stuck in this area without breaking the all-time highs for, yes, since January 2018 up until last week or something like that, or a couple of weeks ago. So this is too long here doing nothing for this to be the top. It will usually need to make it a lot higher before finding a top here. Of course, it's not impossible. Nothing is impossible in markets, guys. This could, you know, go all the way down here. We don't know for sure. But according to the chart pattern, this is not high enough for it to be the top after, you know, after all the time that it was stuck here. It's too long here doing nothing. It needs to go much higher to make up for all this time doing nothing here. That's what would typically happen. Now, be careful, because I've seen already videos on YouTube, people saying that these stocks are very undervalued and they are very, very cheap. This is not undervalued in any way. This is already very overvalued, because it's all trading on future expectations, just like crypto. People are hoping that marijuana will become legal, you know, all over the world. Just because in Canada, I think it's going to become legal in November. I could be wrong with the dates, guys. I'm still not an expert in this industry, but I think it's in November. It'll become legal in Canada. So there's a lot of hopes and expectations that other countries will follow. And this is why we're having all this hype here in these markets. It is already overvalued. You know, it will find a top eventually, and it'll crash way lower than it is right now by probability. You know, eventually at some point. However, for right now, this feels just exactly like when Bitcoin BTC broke the $5,000 level, September 2017. It crashed from 5 to 3, and it was stuck there for some time. And then once it broke 5, it shot up to 20,000. So I would say we are in that time, in that part of the market. That's what I would say right now. So yeah, what I was saying, even if 50 doesn't hold and it breaks, I will continue to call the bulls. Even if 61.8 doesn't hold, which I think it's very, very likely this one would be the last level that should hold, because it's the previous peak from the pre-bubble here. But even if this one wasn't, you know, doesn't hold, that it goes lower, I will be calling for the bulls so long as we can follow this uptrend here. If this uptrend breaks, then okay, I will change my mind. I will reassess. Maybe we are bearish. But until that happens, I'm gonna remain extra bullish in these markets, and I'm gonna be trading long and short, you know, as much as I can. It doesn't mean there's going to be opportunities every day, every 5 minutes. As I said, I have been monitoring this for 1 day or 1 day and a half before entering a couple of trades. So, you know, it's not that there will be times where the volatility goes down, the volume goes down for a couple of days, and you just need to be watching and monitoring until you see a break or a bounce or whatever. And guys, I think that's all. I'm gonna leave the video here. Thank you very much for watching. I'll continue to update, and yeah, I'll see you soon. Bye.